We just heard from two regional Fed presidents, Esther George and Neil Kashkari, and boy are they out of touch as evidenced by their comments on CNBC. We have to remember, the Fed's chief concern is quelling inflation. Inflation, by the way, which they helped to create. But when we look at the Fed and we look at their Fed minutes that just was released for the December 14th Fed meeting, remember the minutes give you an inside look at what was discussed and a little bit more on what's the thoughts of the Fed. We can clearly see that they are focused not only on inflation, but core inflation, which strips out food and energy prices, and they want to look ex-shelter, meaning they don't want to contemplate shelter as much, even though it makes up the main component of inflation, 39% of core CPI. But the Fed's out of touch. You know, when you take a look, inflation is coming down. Shelter costs have decelerated significantly. They're just lagging because of the way they calculated over the previous 12 months. That lag should end come the end of this month into February. And I believe the next few inflation reports we get, we can see inflation really start to come down as the shelter component quits being inflationary and starts being deflationary. After all, it should be based on what's happening in the current environment. But just to give you a couple examples of some of these comments from both Kashkari and Esther George, how out of touch they are. When Kashkari was asked about inflation and he was asked about what the Fed is doing, he compared inflation to surge pricing that you see with things like Uber, where you have so much demand that it surges the prices higher. Now, while that makes sense, he blamed the Fed's poor modeling and forecasting instruments for their mishandling of inflation. Now, how could the Fed not know that they were creating inflation? After all, the government provided $5.2 trillion of stimulus, of which the Fed monetized the majority of it by buying mortgage bonds and treasuries. It doesn't take a PhD to understand that's going to cause inflation. They should have knew about this then and reacted, as opposed to only realizing this now and now being ultra late to the party and having to destroy the economy and send us into a recession. Esther George, when she was asked about inflation, what did she say? She said, well, yes, we are seeing it come down. And someone said, well, what about shelter costs? They're coming down sharply as far as the pace of acceleration. She said, we see that, but it's not changing our consensus or our modeling or our thought process. What that tells me is the Fed is hellbent on killing the economy and sending us into a recession to truly quell inflation. That means a few things. We have to contemplate that as far as investments go. I don't think the bottoms are in yet. Could see, in my opinion, 15 to 20% declines in the stock market, but also could see a similar thing in the cryptocurrency markets. And right now is a good time to invest in bonds. Short-term treasuries, money market accounts, providing very high yields, very safe instruments, but also long-term bonds. Because now long-term bonds, you not only get a decent yield, you also get capital appreciation as yields will move lower into the future. Team, hope you enjoyed this content. Please support the channel, like and subscribe below, and I'll be seeing you next time.